Here, and stocks are showing it 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Katie,
let's talk about one of those reports today. I'm not sure what this says about the economy necessarily, but Eli Lilly reported disappointing data on its new weight loss pill. That overshadowed otherwise strong growth from its current obesity medicine, which is an injectable. You can see Lilly shares down 7.5% pre-market right now.
I can't wait to talk about this story. We're also watching. This market is alive and well.
It's alive and well. Excited for that conversation. We'll probably have more videos of rockets. So
I hope so.
Stay tuned for that. But let's talk a little bit about Eli Lilly because shares now down 10% at the opening bell. That's after it reported disappointing data on its new weight loss pill, overshadowing that strong growth from its current obesity medicine, that injectable. Shares down 10%. Shares have been lower year to date, just by about 3% through yesterday's close. So really taking a bite out of 2025 performance.
Yeah, getting absolutely decimated. And I guess investors had been banking on the pill doing much better. So we're also watching chip stocks.
Mike Wilson of Morgan Stanley. Let's get a quick check on this market. We're just about 9 minutes into the session on the S&P 500. You can see breath is booming in a good way. You have more than 400 names in the green right now, 420 for a moment, and you have fewer than 100 in the red. Take a look at what's leading. This is why we're higher right now. Apple, Nvidia, Broadcom, Amazon, AMD. Those are your biggest contributors on a points basis to this rally, dragging the S&P 500 higher by about 0.6%. Then take a look at the downside. You have Eli Lilly, no surprise there. It's down 13%, taking 9 points off the S&P 500. Fortinet, I know you've been following that one, Matt Miller. Maybe we'll mention that because it's down 25% right now. Airbnb also down, despite, as you said, Matt Miller, $6 billion in share buybacks. Markets typically like buybacks, but not in the case of Airbnb. There's a lot going on there. But let's take a look at the sector breakdown as well. I think this is really interesting because you have all green, energy up at the top, tech, materials, the list goes on. Your sole laggard today is healthcare, and that is thanks to Eli Lilly, dragging the sector overall down by about 0.8%, Matt.
All right, a lot going on in this market, and there's a lot to come. Elf Beauty.
It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Campbell's getting downgraded over at Piper Sandler. The analyst citing snack pressures and higher EU tariffs on the sauces. Next up, we have Caterpillar getting cut to a sell over at Citi. The industrial giant reported disappointing second quarter earnings, and Citi says that the quarter was mixed, but notes the negatives outweigh the positive. Shares down about 1%. And finally, Fortinet is getting a raft of downgrades on Wall Street after the software company gave a disappointing update to its firewall refresh cycle. Morgan Stanley downgraded the company to reflect the, quote, reset of expectations. The analyst also citing reduced confidence in the management team. You can see shares getting reset in a big way right now, down about 25%. Now, we also want to talk about Elf Beauty slipping this morning after reporting a decline in profits thanks to new tariffs on Chinese imports. The cosmetics giant is also declining to give an outlook for fiscal 2026, citing tariff uncertainty. Now, these results, they put a pause on what's been a rapid multi-year growth run for Elf. And here with more details is Elf Beauty CFO Mandy Fields. And Mandy, this is interesting because we saw a lot of companies pull their guidance back in the last reporting season, only to reinstate this season. You're taking a different route here, actually declining to give 2026 guidance. What more clarity do you need on tariffs at this point to have confidence in saying these are the numbers for next year?